This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European Union countries are seeking to soften the bloc's plan to require them to use less gas as Europe prepares for a winter of uncertain supplies from its main gas supplier Russia. The European Commission proposed last week that the 27 EU member states each cut their gas use by 15% from August to March. The target would be voluntary, but the Commission could make it binding in a gas supply emergency. Brussels has urged countries to curb gas use now to help fill storage ahead of winter, and warned that a full cutoff of Russian gas is likely. But the EU plan has faced resistance from a swath of governments, with some flatly against binding cuts and others unwilling to let Brussels control their energy use.
A sudden crash in global gasoline prices in the past 2 weeks has dented refiners' profits, pushing up inventories in key trading hubs around the world, while looming exports from China and India also add to pressure on growing stockpiles. Refiners will be forced to cut gasoline output to safeguard themselves against losses and switch to producing more profitable fuels, traders say, but summer demand is also being hurt by high pump prices in the United States and Europe, and by instability and easing seasonal demand in some parts of Asia. This has led to a rise in inventories from Singapore to Amsterdam, Rotterdam, Antwerp, and the United States, according to traders, analysts, and inventory data.
Moving on to the top news in the energy sector.
Oil prices rose on Monday, bolstered by a slightly weaker US dollar and stronger equity markets in a session that seesawed between supply fears and expectations that rise in US interest rates would weaken fuel demand. Brent crude futures for September settlement rose 68 cents, or 0.66%, to $103.88 a barrel by 14:02 GMT, while US West Texas Intermediate, WTI, crude futures rose 85 cents, or 0.9%, to $95.55 a barrel. A slightly weaker US dollar and improving equity markets are supporting oil, UBS oil analyst Giovanni Stornovo said on Monday.
The gap between the two leading crude oil benchmarks has widened to levels not seen since June 2019 as easing gasoline demand in the United States weighs on U.S. crude while tight supply supports the international Brent benchmark. The spread is closely watched by U.S. exporters as the wide difference makes U.S. shipments more attractive to global buyers. Brent crude futures closed at an $8.50 per barrel, BBL premium to U.S. West Texas Intermediate, WTI, on Friday, the widest since June 2019 excluding spikes related to contract expiry dates, Refinitiv data shows. Next, we have the top news in metal markets. The global copper market moved to a surplus of 5,000 tons in May, from a deficit of 23,000 tons a month earlier, data from the International Copper Study Group, ICSG, showed. Previously, the ICSG had reported a surplus of 3,000 tons in April. During the first 5 months of 2022, ICSG data showed a surplus of 43,000 tons versus a deficit of 23,000 tons in the same period of 2021.
Iron ore futures soared on Monday, extending a rally spurred by hopes of an economic rebound for top steel producer and consumer China in the third quarter, and support for the country's troubled property sector. The most traded iron ore, for September delivery, on China's Dalian Commodity Exchange ended daytime trade 7.1% higher at 711 yuan, $105.27, a tonne, after earlier hitting 723 yuan and 50 fen, its strongest level since July 14. Iron ore's front-month August contract on the Singapore exchange was up 2.2% at $105.40 a tonne, as of 07:02 GMT, after lodging its first weekly gain in 3 weeks on Friday.
We will now look at the top news in the agricultural sector.
Russia's Gazprom is set to cut supplies further through its single biggest gas link to Germany, crushing hopes a deal over grain supplies would lessen the economic impact of the Ukraine war. The European Union has accused Russia of resorting to energy blackmail, while the Kremlin says the gas disruption is the result of maintenance issues and Western sanctions. Citing the instructions of an industry watchdog, Gazprom on Monday said flows through Nord Stream 1 would fall to 33 million cubic meters per day from 0400 g.m.t. on Wednesday. That is half of the current flows, which are already only 40% of normal capacity.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.